please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair. Turning out to be a good session for us. So we are seeing some amount of stability on the screen. In fact, gains on the screen, which is coming through because largely because of the rupee appreciation that we've seen in today's trading session, and which really started on Wednesday intraday for the rupee, and it's pulled back to levels of around 71.7. There are two things which have taken place. One is the announcement that there will be a Prime Minister review or a meeting which is going to take place this weekend. So that really fueled sentiment Wednesday intraday. And separately, we did have Turkey, which raised rates by over 600 basis points. The central bank raised rates, and that really sparked off an emerging market rally that we saw across currencies. And that's what's aiding the rupee as well in today's trade. But overall, all eyes will be on the weekend. A lot of stocks in focus to talk about as well. Those include the likes of Sun Pharma, Spark, both the stocks gaining, something like a Jet, which is also gaining, and a couple of more such as Shriram Transport. Hi, Prashant.
Ekta, hi. Morning. So the bounce continues, right? I mean, from day before yesterday, and all eyes, as you said, over the weekend, what will come out, and that's going to be the focus as well, as we sort of get into the next hour or so of trade. But it's kind of global nature as well. Imagine what would have happened if we had another big emerging market sell-off overnight. I mean, we had exactly the opposite. The dollar was in retreat. Emerging market currencies were rising. So there is that global tailwind as well, which is sort of pushing us and helping us. Stock markets in the US, of course, have been extremely strong. But the big point has been the dollar, which has been on the back foot against emerging market currencies. So, let's keep that in mind. While you may attribute a lot what you're seeing on the screen to expectations and hopes of what the government may announce over the weekend, I would say it is in equal measure, maybe 50-50, 50% that and 50% just the fact that the market had sold off 400 points in a short time span, and it's seeing a bounce helped by global factors. So I think those two things very much in play. Let's get some trading ideas, as always, right on the top of the show. Rahul Mohinder of Viratech India.com is joining us right now. Rahul, thanks very much. Appreciate you joining in. What would you make of things? 90 on the Nifty. Could this extend even more? Where do resistances come in?
No, on the Nifty, I think what disturbs me is the fact that we got stuck at 11,480. That's a very key resistance. I think if we can surpass that, then we'll have another move to about 11,600 levels. But 11,480 from an intraday trader's point of view is a very important level.
Okay. What are the stocks that you would be recommending at this point, Rahul?
Two interesting breakouts we notice. In fact, Bajaj Finance has been on the prowl up, so we still think there's opportunity there. So keeping a stop loss at 2,600, we think initial targets of 2710 will come in the near term. And finally, 2,800 as well could come in if 2710 is taken out. The second would be on pharma. We like pharma. In fact, I recommended Dr. Reddy this morning on your show. But Cipla is another one which we see has good potential. 685 is the price target on Cipla. I keep a stop loss at 655.
Look at Jindal Steel and Power, Rahul. It's certainly had a breakout. We saw a move. I mean, on I think Tuesday it was about $215. It's at about 240 now. Very sharp move.
Oh, absolutely. I think overall the whole metal pack, whether you look at a Vedanta, whether you look at a Tata Steel, I think one is the sector has on the whole been very positive, but no taking away that Jindal Steel continues to look positive. I think it will keep moving up to about 48, 250. That's the price target we have on it. So if you're holding into the stock, I would continue to hold, and I would recommend a stop loss at about 232 levels from here.
Okay, all right, Rahul, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies. Let's get in some more calls coming in from Krish Subramaniam on the F&O space. Krish, over to you. Stocks as well as index.
Morning, Ekta. I think we are seeing the carry forward of the momentum that we saw on Wednesday, and we feel that the one that could lead the charge could be Bank Nifty, but also considering the fact that we are going to have a truncated week again in the current week. The Bank Nifty contract, of course, expires on Wednesday, giving a ratio bull spread which involves buying of a 27,000 strike call, Bank Nifty call, and selling off 2 lots of 27,500 strike call. The net cost comes to about 115. The maximum one would make is 385 bips. Recommending a stop loss of 50. And stock specific, since the metals are leading the charge, and we feel that Vedanta could be the one which has not exactly performed so far. I mean, it's not kept the momentum, but seems to be getting its act together now. One could do a bull spread, buy a 230 strike call, sell a 240 strike call. Net cost comes to about 3.5. Maximum one would gain is 6.5 rupees. Also recommend a stop loss of 1.5. The last one is Larsen. I think ever since the buyback announcement came the last series, this stock seems to have regained a lot of its strength, and I think going forward we could see a lot of outperformance from L&T. But recommending a bull spread here again, buy a 1360 strike call, sell a 1400 strike call. The net cost comes to about 13. The maximum one would gain is 27 rupees, and also recommend a stop loss of 7.
All right, thanks very much, Krish. Appreciate you joining in with that right now. Okay, so here's the big story that we were discussing right on the top of the show, which is essentially the government taking stock of the economy over the weekend. And of course, with what's happening with the currency, expectations running high that maybe the review will result in some results and action as well. My colleague Shireen Bhan is picking up, is standing by with what she's picking up as far as this meeting is concerned. Shireen, what are the key issues which could be discussed?
There is a crucial meeting that the Prime Minister is holding on Saturday with top government ministers and officials to review the economy. The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate. So the message is that they may hold fire for now. The sense is that there is no need for a knee-jerk reaction on the rupee because the economic fundamentals continue to remain strong, and also very mindful, especially within the finance ministry, that fiscal prudence is crucial to ensure that bond yields don't spike further and that the rupee stabilizes. In fact, the finance ministry is clear that it wants to stick to the fiscal deficit target. But remember, it is an election year, so eventually this will require political support and a political call. Specifically on the issue of oil, political demand in the first quarter was to lower fuel prices by almost 5 rupees a litre. Now, the demand was that the centre cut excise by 2 rupees, the state reduce VAT by 2 rupees, and OMCs absorb a 1 rupee hit. But that demand was turned down. The finance ministry clearly believes that it is not advisable to go back to either a subsidy sharing mechanism or act on cutting excise just yet, because that will have a multiplier impact, because the signal it will send out will have an impact on bond yields and then consequently on interest rates, making things even worse for the government. So the path that they would like to take for now is to wait it out, to see how the Iran sanctions impact the oil markets, and maybe if need be act closer to November post the Iran sanctions coming in. Remember, the government is weighing its options on oil payment for Iranian crude, also hopeful that the dialogue with the US on importing Iranian crude will be fruitful. The message that the political class, especially within the BJP, is going to be sent out is that an excise cut at this point in time will restrict the government's ability to spend on things like Ayushman Bharat, which is the Prime Minister's health insurance program, and other development schemes. So that's going to be the sales pitch to the leaders within the BJP. Separately, there is concern on GST collections, on GST revenue. But North Bloc hopes that the direct tax mop-up will offset the shortfall on the GST front. So at this point in time, extreme caution on announcing any other kind of cut when it comes to the GST, and hopeful that things will pick up there. So net-net, the view is that Wednesday's fall and the dramatic recovery in the rupee suggests and indicates that there was overshooting, and that India is in a much better position among the emerging markets because growth is strong and our fundamentals are good, and hence the government believes that the currency should stabilize.
Okay, all right, Shireen. Thanks very much for that. In fact, that is going to be important. In fact, let's take this conversation forward. We have Taimur Beg, who is the Managing Director and Chief Economist, DBS Group Research, who's joining in on the phone line. Taimur, hi. Thanks very much for taking the time out. So what's your expectation for tomorrow? Do you think that the government even needs to come out with any measures at this point?
I think being seen proactive cannot hurt. I think that from that perspective, whether it is an expenditure compression announcement or resolve to maintain the fiscal line, from that perspective, I think it's always helpful. It will be seen as a constructive development from the market. Now, whether it is needed or not is a different issue, but you could argue that given where growth is and where fiscal is, there's definitely room for some adjustment, which need not necessarily hurt growth, but at the same time, keep giving signal that the government is pursuing, fairly responsible fiscal policy. And mind you, in this context, it's very important to consider fiscal in the consolidated sense of the matter, because we always sort of fixate on the central government fiscal deficit, but that is not the true picture. The true picture is a consolidated deficit, which once you add the states, is running 6 to 7% of GDP and has not really improved over the half decade or so.
Taimur, let's take a morning. Prashant here. I mean, let's consider that the meeting happens and the statement which is put out says, well, we have full intentions to not cross the line on the fiscal deficit. Monetary policy is within the ambit of the RBI, and they are very vigilant, and such kind of general statements come out of the meeting. What is the reaction, the forex market reaction, going to be on Monday? You think that's going to be enough?
I mean, I think that we can all agree the large part of the FX developments are from global cues. They're not necessarily reflecting any major developments in India. And I think we also agree that most of the major developments in India are fairly positive. Yes, the current account has widened, but that's because oil prices are up. And fiscal hasn't really improved that much, but that's because several revenue structural measures that are going on are not fully, bearing fruit yet. But generally speaking, there hasn't anything been, in terms of growth or in terms of inflation, we have given the markets any reason to panic about the currency or overall policy outlook. So global cues, in my view, right now is about oil. And I think that going into November, with respect to the Iran sanctions, oil will remain on an upward trend. And that will certainly have some impact on countries which have a large oil import bill. So whether it is India or Indonesia, I think it's sort of beyond the control of the authorities to some extent, unless they respond with some tightening of fiscal. So that's the issue. Even if you believe that developments are from global cues, there has to be some domestic response. And perhaps, in my view, the fiscal response will be seen more positively by the market than the monetary response, because the issue is about the oil import bill and the current account.
So Taimur, today's appreciation or the appreciation that we've seen from Wednesday, how much of it would you attribute to, say, what happened with Turkey and the raising of rates by over 600 basis points? And how much of it would you attribute to the news that there would be a meeting over the weekend by government officials in India?
I think I would attribute majority of that to the global cues because it's not just a question of the rupee. Generally speaking, the dollar has weakened all over the world in the last 48 hours or so. So whether you look at DXY, which is weighted towards the euro and the yen, or the ADXY, which is weighted toward the emerging market Asian currencies, in both cases the dollar has given up ground. So I think that what's happening in Turkey, what's happening in Argentina, and also perhaps some glimmer of hope with respect to the trade issue vis-a-vis U.S. and China, I think those were bigger drivers of the exchange rate than expectations of the meeting and actions from India.
What are you expecting from the Reserve Bank of India in October as well as, say, in December? And are you of the view that there could be an inter-policy meet as well?
I don't think there is that creative panic or urgency to warrant, inter or meeting measure. We have seen episodes like that in the past. We're not in an episode like that right now. As far as the RBI is concerned, yes, they'll hike next month. They'll hike in December. I think we are at a time in the global cycle that as U.S. rates go up, and we think that the Fed will also hike in October and this month and again in December. I think this will certainly pave the way for global uptrend for interest rates, and India would have to follow suit. And I think it's a very important point to make here that a lot of times we sort of fixate on India-specific idiosyncrasies and developments and try to gauge monetary policy from that perspective. But the fact of the matter is India is substantially susceptible to global shocks, interest rate shocks or exchange rate shocks or oil shocks, and therefore cannot have monetary policy conducted in India without paying attention to what's happening in the rest of the world. So that's why I think the RBI will be hiking both in October and December.
Taimur, it's always good speaking with you. Appreciate you joining in with that commentary in terms of expectations from the weekend review meet. 9293 points on the Nifty. We're at about 11,462. Advanced decline is looking super strong. 1573 stocks are higher compared to 464 stocks lower. That is the picture as far as the NSE is concerned. There is some news flow on Sun Pharma and Spark, which is Sun Pharma company. The US FDA has approved an eye drug, which actually is quite significant, and the approval has come from the Halol facility. Ekta, tell us more.
Well, actually, Prashant, this is a significant development which the market has been waiting for. It was expected to take place in FY19 itself, which is the approval of this particular ophthalmology drug called Xelpros. It will be adding to Sun Pharma's specialty pipeline. Now, the street was expecting it to take place in FY19, and there was the target action date by the US FDA, which was scheduled for November. But surprisingly, the US FDA has already approved the drug. Now, there was a spanner in the works because this drug, as well as Ellipsia, two drugs which are basically produced by Spark and in-licensed by Sun Pharma, were going to be manufactured at the Halol facility. Now, just a couple of weeks ago, we came to know that, Halol was re-inspected. It was a product-specific inspection. They had received 6 observations. So there was fear in the market that there could have been a delay in terms of approvals of these two key drugs. But that wasn't the case. Now, with the approval of Xelpros, one, it negates all concerns with regards to Halol, that Halol is back in business, and the fact that those 6 observations then get negated in terms of an issue. And lastly, Xelpros, in fact, will contribute around $50 to $70 million on an upside in terms of Sun's numbers on peak revenue basis, and it also adds to their specialty pipeline. Spark will benefit because they'll get royalty and milestone payments.
Okay, stocks up about 2% or so. Thanks very much. Shriram Group's holding company, SVL, has been admitted to bankruptcy process, and Credit Suisse says the company would lose control over the assets and operations to Interim Resolution Professional, that is the IRP. Well, we have Mr. Umesh Revankar, Managing Director and CEO of Shriram Transport Finance, joining us now on the show. Mr. Revankar, thanks very much. Appreciate you joining in. Could you tell us the basics? Who's taken this company to the NCLT? What's the amount which is involved at SVL?
This is between one of the subsidiary of SVL and the customer of that company. There's some business dispute, and the amount should be very small. I think the original amount is around 6 crores advance given. So that much I can tell you. But more than that, more details are available in NCLT. You can refer that because it's a public domain. Full information is available.
Mm-hmm. Okay, so in your assessment, what is the total P&L impact of SVL being taken to the NCLT? I mean, what is your game plan? How will you sort of treat that exposure? Will banks evoke the bank guarantee given by Shriram Transport?
This is totally different because SVL will be able to handle the dispute. The amount is very small. The original amount is around 6 crores. They will be able to settle matter. So I don't think it has anything to do with our guarantee to SVL. So that will be addressed by SVL themselves.
Okay. What is the expectation, sir, on freight rate rise on account of rise in oil prices?
See, most of the contracts nowadays are contractual. That means any escalation in fuel cost will be passed on to the customer. So I don't think there will be any big challenge on the increase of fuel price. Our truckers will be able to pass it on to the end customer. However, there are some what you call spot transport vegetable and farm products, all those things, they normally do not have what we call contract, but it is based on demand. And sometimes if the vehicle availability is less, they'll be able to take more money, and if availability is more, then the freight rate will be a little lower. So it is a demand and supply situation. However, I think most of the freight cost, the fuel price cost will be passed on to the end customer.
Okay, just getting back to the issue, Mr. Revankar, there are 4 businesses in SVL, of which the EPC company is in fact in tough shape. What are the assets and what recoveries are possible from SVL? Also, will SVL promoters consider monetizing Shriram Capital stake to raise funds and say repay the SVL bondholders?
Right now, this particular dispute, that would be addressed by SVL. I don't think it will really need to monetize from the promoter group or capital, is what I feel. But going forward, we need to really see how to address that. And last time, if I remember, our founder has already given a clarification that if STFC investors will not have any impact on this, so it will be taken care by the promoter if there is any such situation.
Okay, sir, thank you very much. Appreciate you joining in with that sort of clarification. So that's the amount, 6 odd crores is the amount over which SVL has been taken to the NCLT. Mr. Revankar saying that since the amount is small, I mean, this doesn't have to come back to the bank guarantee or anything of that sort. SVL should be able to handle it between itself and the customer. And to the other bigger point, he kind of sort of reiterated Mr. Tyagarajan's sort of commentary earlier, which is to say that bank guarantees would, I mean, it'll be handled by the promoter, and it won't sort of lie heavy on Shriram Transport, the company itself. So that stance has been maintained so far. So that is what we are picking up from the management of Shriram Transport. Stocks actually come off quite a bit from the high. It was about 20 or so.
Let's get talking in terms of specific stocks, what you should do in what has been quite a lively market today. The mid-cap index up around 1.5%, and the Nifty closing in towards 11,500. Rajat Bose joins in to discuss that. Rajat, over to you then. What is your strategy both for the index as well as specific stocks?
See, regarding the index, I would say that so long as the index maintains itself above, say, 11,488, then the strength would be pretty strong. You need not worry so much about any kind of major correction happening. But till such time it takes out 11,488, which is not happening right now, you still have that problem that it may not really sustain above that 11,488 mark. So that is the issue. But even in such a situation, you have stocks that are showing strong breakouts, a lot of open interest additions. So I've chosen 2 such stocks. One is Tata LXI, where you've seen that 1,07,000, that is about more than 5% of its total open interest has been added in futures. Tata LXI, I'm looking at levels of 1378 and 1366 on the upside. And I would put a stop loss below 1353 at 1337. I'm actually talking about the spot levels. The futures levels could be a little higher. And regarding UKL, what I've seen is that above 722, there has been a strong breakout. So I would put a stop loss below, say, 720. And I would be looking at targets of 740, where there is a strong resistance. And once that is taken out, 750 would be the next target. So, as I said, that even though the Bank Nifty or Nifty may not perform that great, but still there are stocks which may actually show a lot of strength.
Rajat, appreciate you joining in. Good speaking with you. Thanks very much. Okay, the market's also coming off a little bit. We're up just 85 now. We were up 95 or 10 minutes back. So let's keep an eye on this one, whether things start to deteriorate a little bit more. We take a very quick break here.